بسم الله والحمد لله والصلاة والسلام على رسول الله اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Assalamu alaikum wa rahmatullah. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 24th of November 2024. I'll be doing the weekly market review. Starting with DXY, here we have the weekly time frame chart. As you can see, price has rallied up higher. Took out the buy side liquidity. We have these two buy side liquidities that are pretty much relative equal highs. Price swept them out. And next target, we'll be looking at the concept parchment or the midpoint of this weekly favorite gap right there, right there. And if price wants to retrace, we have this weekly busy buy side imbalance, sell side inefficiency. Going to the daily time frame chart, you can see how price retraced here on Monday and Tuesday. Tuesday formed the low of the week during when trading during this daily busy favorite gap, the buy side imbalance, sell side inefficiency, and then we roll it up higher to the buy side. You can see how price after taking out the buy side liquidity it has formed a long premium wick right there. Why it's a long premium? Why is it a premium wick? Because we're trading right now, we're below it. So anything that is below market price is considered premium, and then anything below it is considered discount. So this premium wick we'll be looking and monitoring it next week closely. If price would be respecting the midpoint or the encroachment of the midpoint of this premium wick or not. If price respects it as means of resistance, we're likely going to see price retrace down or take out the sell liquidity and reach to this weekly favorite gap, which is the BC. Otherwise, if we trade and rally above it and we close above it on a daily time frame, on a daily basis, we're likely going to treat it as a means of support that can push price up higher to the buy side liquidity or to the quarter to that weekly favorite gap, the SIBI, that's a sell side imbalance, buy side inefficiency, and the potentially the high of that favorite gap, which is this candle stop right there. So that's going to be pretty much it for DXY. Going to ES here, I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, price is just being inside the range from this low to this high. There's not much to be mentioned about it. I've told you about this midpoint of this bullish order block, which is the midpoint of this bullish order block, and if price wants to respect it or not. Going to the daily time frame chart, you can see that we have a little equal lows here, the sell side liquidity. We're currently trading in between this range from this high to this low. So I want to price retraced up higher into the pretty much the levels that I've told you about, which is this favorite gap and the inverted favorite gap right here. If price shows signs of reversal here and start breaking down lower, the next target would be this low here and the favorite gap right there. I'm including the volume imbalance with this favorite gap because this is the way how you annotate or mark down your favorite gaps. So if price shows any signs of reversals here, we're likely going to see price trade and take out the sell side liquidity and the favorite gap reach to the favorite gap. So how further below this sell side liquidity can price reach to? It is the favorite gap right here. And you can also consider the inverted favorite gap here. This inverted favorite gap from this candle's high to this candle's low. And this can pretty much can be treated as a launch pad or a springboard to pretty much tank down lower towards the sell side liquidity. So that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see the same thing is mentioned regarding NQ, price after taking the all-time high right there, bit of a consolidation, and we're pretty much consolidating here to have bit of equal lows here. We have this inside liquidity that's inside this favorite gap, the busy, buy side imbalance inside inefficiency. Price has retraced to the inverted favorite gap here, and we've seen some reaction. We've still yet to trade towards this favorite gap and to the inverted favorite gap that ES has already traded to. As you can see here, ES has already traded towards that favorite gap, but NQ did not. Now, if we start seeing some kind of a reversal, signs of reversals here, and this is to be monitored on the lower time frame or the intraday time frame charts. If we see any signs of reversal or price wants to break down lower, the weaker asset class or the weaker index is going to be the NQ because it refused to trade up higher towards the favorite gap. So as I've mentioned, the same thing is mentioned here for NQ regarding ES. So that's going to be pretty much it for NQ. Going to Euro USD, also known as the fiber, here I'm viewing the weekly time frame chart. Price took out the low. Now, if you consider this as a range, We have this range high, this range low, and price is pretty much trading inside the range. We took out one of the ranges here. We took out the sell side liquidity and we traded down lower towards the monthly favor gap. Put your monthly time frame chart. And regarding the higher time frame outlook, as people would be quoting it like this, I will have a major outlook on the asset classes at the beginning of the next year. It's going to pretty much include every asset class that is potentially tradable, like Bitcoin, like gold, the commodities, the indices, the forex market, the XY. So I'm going to be including everything in the major outlook that's going to be uploaded on the beginning of the next year, and it's going to actually show you a broad view or a big picture outlook on what I'm expecting throughout the next year. But to just be specific here in this one, this is the weekly time frame chart. You can see how price took over the sell side liquidity and reached to the monthly fair value gap, and we have a sell side liquidity here. Now, if price wants to continue running down lower, it can reach towards the sell side liquidity. Otherwise, the next target would be this buy side liquidity because we have this range. We took out one of these ranges liquidity, which is the sell side liquidity. We took out the sell side liquidity first. This means that the next is going to be the buy side liquidity. So, and this is vice versa for DXY. So if we're expecting higher prices here, attacking the buy side liquidity for Euro USD, it means that for DXY we're looking for price to pretty much tank down lower. Going to the daily time frame chart, this would be a low hanging fruit target right there. It's a buy side liquidity that is overlapping with a weekly fair value gap here. So this could be something that you can aim for, and you can also aim for the low of the bearish order block right there. We have a small fair value gap here as well that you can aim for. So that's going to be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, the same thing is mentioned for Pound USD. Price traded to the constant of that discount wick right there, and we've seen some reaction. I would want to see if price wants to reverse from here. I want to see some support at the constant or the midpoint of this discount wick right there. It can revisit, but I don't want to see any closure below the midpoint. Going to the daily time frame chart, this is just a pretty much a zoomed in version here. We have the sell side liquidity here. Below the sell side, we have the fair value gap. If price wants to continue, it can continue there. Otherwise, we're looking for the low of that here, short the block as the low hanging fruit, and above that we have the high that's overlapping with the weekly fair value gap, SIBI, and this daily fair value gap. So that's going to be pretty much it for this weekly review. I'm really not pushing you to take any trades because next week we have a holiday on Wednesday, I believe. It's going to be Thanksgiving. So you have to be careful when trading, especially when we are approaching the end of the year. I know that for some people, it could be the best time of the year to be trading, and it is absolutely fine. If your trading model or your experience in trading has led you to the decision that at the end of the year is a good time for you to be a trader, that's a good time for you to be trading, then you trade. But I'm saying this just as a general information, general knowledge for the people that it is not advised for you to trade when we're heading towards the end of the year. So you're likely going to take it easy. If you don't want to trade, if you don't want to stop trading, you can at least minimize your risk, your leverage when you're trading. So I really hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.